Okay, folks, welcome to another Sunday Night Futures Live. And okay, I had 0 people showing. It was weird. Okay, now it just caught up. All right. Happy Sunday, everybody. Happy Hanukkah to all of our Jewish friends out there. Happy or Merry Christmas, I should say, to all of our Christian friends out there. As we proceed into the new trading week, the futures are open. And what we're going to be talking about tonight is not too much. We're going to keep it light. I'm going to try to do a lot of chart requests. I know that a lot of people are. I just got a text with one of the most popular things that I talked about last week was the announcement that I wanted to do a coffee brand, and I keep getting another one from Lewis just came in. Names for coffee. So he likes Desmondo, IG Knight. But we have a bunch of good names that people keep bringing in as potential brand names. So please continue. Set us up with your ideas of what you would like the coffee to be named. So we're going to keep it light. We're going to talk about, obviously, the opening futures action. And I want to do a lot of chart requests. Let's go to say hello to people. Tom Lou, hello. Hey, Bob, weather is too cold, and France, Poland, very panicked for snow. Yeah. Welcome, Tom. We need longer weekends, and Mondays should be outlawed. Agreed. Love it. TZ Burton. Hey, TZ Burton. Hi, Bob. Merry Christmas. Merry Christmas to you, my friend. Ho, Bob. Any thoughts on the direct scene Amazon? The direct scene Amazon Bear ETF. They have an ETF that trades 1 times the inverse of Amazon. I never even heard of it. Is it optionable? We'll check it out. Good evening, Tim. I see you. Welcome. All right, let's talk about the opening price action of the futures. Light night tonight. I see already, normally we would have right now at least 40 people on, and there's only 15. It really is a contrarian indicator of what's going to be going on this coming week. So it's going to be a light volume trading week. The futures are going to be no different. So we're looking at we'll begin with equities. Everybody's most interested in equities. We'll begin with the S&P 500. This is a 15-minute chart. We're showing is down on the session. I think that's because we must have gapped up and then faded a little bit. Yes, it's exactly why. So technically the futures are up right now relative to Friday's close, but not relative to the first tick of the evening. So I like this. It's only a 15-minute chart, but we could pull back and we could say, all right, what does the 30-minute chart look like? Is it similar? Yeah, it is kind of similar. What we could say here is that we have the potential for a higher low. Equities are now inching up towards the highs of this session, and we're looking for a breakout here. I did the week ahead commentary from members that's posted in the members area. I also did our top 5 picks for the new trading week. That's on YouTube, also on the website. Why are you doing this to me here? Edit. All right. This is a different screen. They must have changed this. And I remain bullish going into the back half of the year. And you'd be saying the charts look like hell. And you're right. I don't argue. I can't find a chart that I really, really like and that I want to get aggressively long of for any more than a couple of days. To be honest with you, I don't argue anybody's viewpoint that the market looks like garbage. The reversal week last week was an outside reversal week across the spectrum on the major indexes. So I don't argue with anybody that the technicals and the price action are absolutely abysmal. I am purely, we just went to unchanged on the session. Technically still higher than Friday. But I do believe that seasonality will play a factor this time of year because of the whys. Wall Street traders are not on the job. They're not going to let the stock market crash. They have the computers set, the algorithms are set. Keep the market in check. Float it around. It's going to be light volume. They're going to move the market around, and it's definitely going to be a bias to the upside final week of the year. So we'll go to seasonality in a moment. Market just went positive relative to the open of the evening. So we have new session higher highs, but very thin trade. It's obvious. The NASDAQ, again, what we're doing here is potentially putting in a higher low. And what you're seeing here on RSI in particular is a very strong RSI on the NASDAQ. Now, this is what you call a bullish divergence, where you have the NASDAQ RSI on a 30-minute chart, which bottomed out on Thursday. Then it has been rising ever since Thursday, despite the fact that you've had the price action of the NASDAQ moving lower. So this is a very good sign. And I would wager a bet that on a 4-hour time frame, this is even magnified now and reflected. And it is. We have a W formation formed on RSI. And in fact, now on a 4-hour time frame, we're beginning to break out of a 4-hour downtrend channel. So again, the price action last week was horrible. We're going to go to Investors Business Daily's analysis of last week's price action. I'm going to talk about what I agree with, what I don't disagree with. By and large, I agree with their assessment, but I have a different take on how to manage the markets than they do. A little bit of a different take. So NASDAQ looking good here. Let's go back to the S&P's 4-hour time frame. See how they're setting up. Also a 4-hour breakout. This 4-hour bar is the first 4-hour bar breakout. We're going to have several of these bars between now and the open tomorrow at 9:30 Eastern Standard Time. We don't know whether or not this bar is going to close green or red. Right now, I can only give you this snapshot in time. There's many, many hours left to go before this candlestick closes. About more than 3 hours, 3.5 hours before it closes. So a lot can happen here, but I do think that we are going to press up higher. Let's go to the 30-minute chart of the S&Ps again, revisit them. Do we have the same RSI? Yeah, we do. We bottomed out on Thursday, and we have a bullish divergence on RSI for the S&P 500 and for the NASDAQ. Let's take a quick peek at the Russell 2000. We don't have the same RSI divergence here. We put in new lower lows on Friday, but we are rapidly moving up higher. And it looks as though we have a potential for a break. As a matter of fact, we have a 30-minute breakout right now on the Russell 2000. So the small caps are looking good as we proceed into the new trading day. Let's check out the 4-hour chart. Again, much as what we saw with the NASDAQ and the S&Ps, we are breaking out of a 4-hour downtrend channel. Unless you're trading futures, you can't do anything right now anyway. So we'll wake up tomorrow morning, see what the market has delivered us overnight, and we'll trade accordingly. The only ask that I'll give is that do not get overly aggressive if they pump this market up on Monday morning. Please do not go chasing this market. If anything, whether it be on a weekly time frame, and I'm going to go over this in a moment too. I brought up a chart. Had you gotten very, very long of the market on the bullish enthusiasm early last week, you would have gotten hammered over the head by Friday afternoon. Don't let them take parking space up in your head. Who are they? The slick-back salesman on CNBC and Fox Business News, don't let them take parking space up in your head. This is a bear market, and there are major reasons why we need to be concerned, and one of them I discussed with members yesterday, and it's something I've been warning about for several months now on these live streams, and it's beginning to firm up, and things are about to get very, very nasty in the beginning of 2023. But until then, I think we get a Santa Claus rally. The Dow futures, 4-hour chart. We are breaking out of a 4-hour downtrend channel. Let's go back to that 30-minute view. We're looking good here. We floated up above this resistance level on, I should say we closed at it on Friday, and today we are breaking out through it. And much as what we saw on the NASDAQ 100 and on the S&P 500, the Dow RSI, we have a bullish divergence relative to price. RSI pressing up higher while price is pushing down lower. That means that the relative momentum to the downside is losing steam. And let's bring up some names here that I spoke about yesterday on our best stock charts for the new trading week. And let's sorry about that noise. I hate that noise. Tesla, we don't have that here. That bullish divergence. I wish we did, but we were up on Thursday. But Friday was just a miserable day for Tesla. We do have a position in Tesla. Let's bring up what else? Coinbase. We have a position in this one. This is a problem child position for us. RSI bottomed out Friday morning, and it appears as though we are pressing up higher. Obviously, this is not trading right now, but we saw a fairly decent close off the lows on Friday. Let's take a look at a 4-hour chart. So these are a couple of the names that we're going to be looking to trade long as soon as tomorrow. Well, we already have a position in Coinbase long. Tesla, we have it's an options position called a Strangle. But I do need to reduce our call side or roll our call side strike. What else do I want to look at next? Dollar, US dollar. All right, this is a 4-hour chart. It's looking pretty good here. That does not bode well for precious metals, but I will say this. Precious metals traded up higher along with the US dollar on Friday. That usually doesn't happen, and it usually doesn't last. One of them is going to win. Usually it's the dollar trend that wins. So if you're liking precious metals right now, I'm going to warn you, the chart of the mining stocks and of gold on a daily time frame, this includes silver stocks, does not look good. Even though the price action was higher on Friday, I don't like the momentum indicators. They are not looking good. We'll see how gold is trading in a moment, but the dollar looks like it wants to press up higher. This is a fairly good move. Let's do a deeper dive. Let's go to a 15-minute chart. Not much happening here at all. Let's check out the euro currency. What happened to my... hate that. The euro is looking weak, which bodes well for the dollar. The Japanese yen is gapping up. We're off the session highs, but we're gapping up here. Let's take a look at commodities. Before we look at commodities, let's take a look at what 10-year yield futures are doing. Yields are moving up higher. This is a pretty significant move on the 10-year. This is the December front month contract. So I'm gonna flip a coin here. I haven't looked at gold yet, but my guess is going to be that it's probably lower. But if it's higher, I tell you, that means that somebody's very, very worried out there that something is very wrong with this market. And we are up. Let's check out silver. Yeah, very light audience tonight. It's going to be a real quiet week. Silver. I had these all set up, but they did not hold on my watch list here. Was it /SL? No. Was it SI? Yeah. Okay. /SI silver up nearly 1/4 percentage point on the session. But it's down versus Friday's close. We're just off the session lows. That's it. We're not up relative to Friday's close, folks. So be forewarned. Let's take a look at agriculture and perhaps some protein names. Soybeans. Let's go to the weekly chart. Soybeans are looking pretty good here. I mean, last week was a down week, but it was a consolidation week. I think that soybeans are going to press up higher. Wheat futures. Wheat had a very good week last week. It broke out. And I think last week we were talking about wheat as a possible long trade. In fact, yes, we even we were talking about WEAT. I don't know if anybody traded that. I never put on a position there. It was looking good early in the week. That's right. We were tracking it, and then I forgot. I just it fell off my radar. Corn. Corn had an up week last week. Still in no man's land. Wheat definitely looking better. Let's take a quick peek at energy prices. Tick me off. They hate having to find these. They deleted my watch list. Light sweet crude. Light sweet crude. Here we go. CL. Let's do a 15-minute chart here. Wow. This is a pretty good move. Light sweet crude is looking very strong. Very, very strong. I filled up my home heating oil last week on the pullback on home heating oil and then the reversal. I said, you know what? Big reversal, weekly time frame. In fact, let's bring up home heating oil. I'll show you what I'm talking about. As much as I bring this up, you would think I know the symbol. But this is one bullish chart. Home heating oil. It's a simple one too, /HO. So if you take a look at a weekly chart, look at this big down week, right? You would expect a continuation move lower. I even set an alert because I was going to order home heating oil on a break to new lower lows and watch for the support level to get hit. It never had a new weekly lower low. It just reversed. So a strong week last week. And I think is this trading right now? Yeah, this is trading right now. So it looks as though we're gapping up and into the wick of last week's candlestick. That's a bullish event. So I think home heating oil prices are going to move up higher. It's been an expensive year for home heating oil. I'll tell you that right now. Let's take a quick peek at nat gas. That gas gapping down nearly 6.5% on the session. So volatile. We have a position here as well in Boyle. We have a very, very wide strangle. Those options expire in January. Let's bring up Boyle. We have I think the 82 strike to the call side, 25 to the put side. So you're going to see pressure on Boyle tomorrow. What else do we need to go over here? Let's take a quick peek at volatility. Volatility is very, very strange in that volatility on Friday on the VIX contract. This is today. This is Friday right here in green. The December contract was up on Friday, whereas the VIX index, the VIX, was down on the day on Friday. Really weird price action in the VIX market, volatility market. So we'll go to that chart in a moment. So let's take a look at comments here. And then we'll go over to, I'm going to try to do as many chart requests as possible tonight. But please, initially, just do one at a time so that everybody gets an opportunity to have their chart reviewed. If we have time between when I'm finished with the first round and we go into, we have time left between that time and 7 o'clock, I'll take more. So just let's give everybody an opportunity, please. Paul M. Hello, everybody. Paul, hello to you, sir. Talon. Hey, Bob. Hey, Talon. Franklin and I are married to Spy, and we are looking for a divorce. Let's hear some good news. Well, I'm giving it to you. We have all right. So what they're talking about, Franklin and Talon are in a trade. You have the same strikes I do, Talon, on the trade. So we have a Spy trade, and it was a really high probability trade. We sold 10 delta strangles. One call, one put. 10 delta means that the share price moves initially 1 dime for every dollar move in the spiders. Since we had such a big downdraft last week, a lot of pressure got put on the spiders to the put side. So now we're looking for a little bit of a reprieve. So, you take a look at the S&Ps right now. I think we're going to bounce here, Talon. I'm reluctant. I'll be honest with you. If we have seasonality, and hear me out on this, my goal right now between now and the end of the year is to do a lot of unwinding of positions and to free up capital, because this is a great topic that you bring up, in that we opened up the 10 delta spiders trade, and that's 90% probability of profit, and we've rolled down the call side, I think, at least once or twice already. So we banged out some profits there, but the put side is our problem child, and we're looking for some relief. I'm reluctant, though, to roll down the calls again. Why is that? Well, if we rally on the S&P 500, the premium is going to get killed, meaning a lot of volatility is going to come out of those SPY puts. And if I roll down the call side, then I'm kind of stuck in the trade, right? So what I want to do is I want the SPYs to rally. I want to get profitable on the SPY trade, even if I'm flat, meaning the SPYs, they're trading where I opened them in terms of price. I want out. I want to exit. I'm going to book my profits and I want to walk away. Why? I want to raise capital, because that 10 delta, a 90% probability trade, is very close to, I think it is in the money, right? We're in the money on that trade. Now they expire in January. Yeah, we're right there. We're right at the money on the SPY puts. So I want to see a rally here, even up to the 20 period moving average on this line in blue. even a rally up to that resistance level would take a lot of pressure off of those puts. And as so long as we don't roll down the call side, well, that rally will take a lot of pressure off the puts. It'll allow us to exit the trade and then go to cash. Because think about it. That 10 delta trade got in trouble, and we haven't even seen a crash yet in this market. That's a 90% probability trade, 90%, and it hit the money. What would happen if this market got into real serious trouble in terms of volatility spiking through the roof? So lesson learned here. So we want to go into 2023 with a lot of capital. The L word doesn't stand for loser. It stands for liquidity. We want our capital reserves. As Gordon Gekko once said, you can't piss in the tall straw with the big dogs without your capital reserves. Sorry, this is a family-friendly show. I used artistic license using the word PISS. My apologies for those folks that are watching this with family, children, and friends. And I'm thinking about Patrick, who watches this show with his grandson. Sorry, William, if you're out there, don't use bad language like that. Oh, Patrick is on today. Oh, boy. Hope William's not watching right now. Hey, Bob, dip my toe into Tesla on the close on Friday. I'm fine with that. I think that Tesla, there was a lot of selling on Friday. A lot of selling. I mean, they tried to make it a two-sided trade. The bears weren't having it, man. I watched that price action all day long. Every time they tried to take it up higher, sellers moved in and crushed it. Really bad price action. I think that we may have some more downside move on Tesla. I'm kind of hoping for it, or else I'm probably not going to trade it to the long side. Let's bring it up. Yeah, you take a look at this chart. This is a daily chart. We had an outside reversal bar on Friday. We did close right at support. So it's anybody's guess. You know, for all I know, they'll gap this up on Monday morning. The news headline will come out. I'll tell you what's going to send this stock up higher. If Elon Musk even tweets that he's interviewing for a CEO, then this stock rips up higher for a trade. There are other reasons why I'm not enamored with Tesla stock. He's declared war on the government. And let's face it, this company is profitable because of government subsidies for EV vehicles. And he's got SpaceX, which is directly linked to the government. So he's got a pair of brass, you know what? I'll tell you that. I'll give it to the guy. But as the shares closed out on Friday, you could see there was a lot of selling into the close here. So ideally, they try to push the shares down. If they push Tesla down, I would buy that dip on Monday morning, assuming that the market is up. It's got to be up. If the market folds and it rolls over on Monday morning, I'm not putting on longs. Not yet anyway. Tesla for a trade, Pat? Got you. Agree. Four held up last week, but has all types of trend lines. And we'll take a look at it. One to watch. Not sure if the economy will hold it back for the next 6 months. We'll take a look at the weekly and monthly chart. The lovely Trish. Hello, Trish. Happy holidays to you. Great to see you. Pete. Hello, Pete. TTCF has over 35% short interest and it's oversold. Held up good in this down market. All right, Pete, I got to make a list here because the list is growing. Where's my pen? Oh, here it is. Got it. So we got 4. We got TT. And if I missed anybody, I have 4 in TTCF. You know, drop them into the chat box again. And let's keep it 1 per. And again, if we have time, we'll take more. Hey Sean, how you doing, man? AQN. Didn't we go over that one last week? That sounds familiar. AQN. Okay, let's get to it. I'm trying to keep it light tonight, so not a lot happening here that I'm going to go over. Very light news day. I will say this. I'm kicking this off with I don't know why, but George Foreman. I always liked George Foreman. Uh, he's a guy that is a great fighter who retired for many, many years. I remember watching as a young kid him fight Muhammad Ali. That was one of the first boxing matches I ever watched, and I was always enamored with the guy. And when he came back at about age 40 and became world champion again, he was such a nice guy. So I follow him and I've tweeted him a number of times. He always replies back, and I just wished him a Merry Christmas. He posted something, I replied back to him, and he replies back, "Love you, friend." So he's a really great guy. So I'm sure he's not watching, but just in case, Merry Christmas, George Foreman, a really nice guy. All right, so Investors Business Daily, they put out their market analysis for the week last week, and I'm not going to read this whole thing. We're just going to talk about it a little bit because by and large, I'm in agreement with them. Market rally analysis: in a few days, the stock market rally abruptly shifted from abruptly shifted from moving above a trading range to tumbling below. Yes. Well, when you take a look here, and this is what I always say, for those that are you out there that, why is my screen black on your side? From my end, I am not showing my chart on the screen. Could somebody tell me if they could see the chart on here, please? Or else I'll have to do a refresh and I'll lose all your comments. Will AQN still keep its 18? I don't know about that. That's a fundamental question. It is black, right? I'm going to do a refresh. All right. I'm going to lose everybody's prior comments here. So my apologies. If you type something and I didn't see it, let's see if I can get this to refresh. Let me do a screen share again. Oh, wrong screen share. Sorry about that. There we go. Okay, cool. All right. So for those of you out there that are new to technical analysis and you're wondering what indicator do you rely upon most? What's the most important indicator besides price and volume action that you rely upon most? I have to say that for the longest time, it was a toss-up between RSI and the stochastics. But when it comes down to a trending market, I use the stochastics, the slow stochastics, far more than I do RSI. RSI I use more for divergences and extreme overbought, extreme oversold conditions. But the stochastics, if you use them, and many times people use them inappropriately, and I was guilty of this for the longest time. I would always use them for overbought and oversold conditions, but I never valued what they would be doing in between. And when you take a look at this weekly chart of the NASDAQ comp, and this goes to what they just said here, the market abruptly shifted from moving above a trading range to tumbling below. Why might that happen? What was an indicator that you could use that could tell you, hey, listen, be careful with this rally. Be very, very careful because it may just fade. Simple. Take a look at your stochastics. They were rolling over down below 50. When they're rolling over down below 50, there's a phrase we use: rallies tend to fade. Rallies fade. So when those stokes are down below 50 and especially declining, I view any rally early on in the week with a huge amount of skepticism. Now, if we manage to close strong on the week, okay, well then we'll look for a new weekly higher high and then a strengthening of the weekly Stochastics, perhaps they're going to put in a new weekly higher high. But until that occurs, right now, what you're looking at on this chart, any rally on the NASDAQ composite needs to be viewed as a probable bull trap. And any trade that you put on ought to be on market weakness and then selling into strength. Let's go back. On Thursday, the selling intensified amid weak economic data that fanned recession fears. They missed a point here. He's right, or she's right. I don't know who wrote this. On Thursday, the selling intensified amid weak economic data that fanned recession fears. And what they should have added here with the Federal Reserve, which issued hawkish rhetoric following their rate hike on Wednesday. That's the proximate cause of as to why this market sold off. If he would have given rhetoric that was, and I'm not saying he's wrong. He's probably wrong, but I'll give him a little bit of leeway here, that the markets see that the economy is in recession now. They just won't declare it a recession, even though we had 2 back-to-back quarters of negative GDP, and we're still technically, in the old definition, a recession. I digress. They're worried that they have a Fed chief at the helm that is not acknowledging that the economy is slowing down. He's not acknowledging the fact that the establishment survey for non-farm payrolls, there is a 2.5 million gap difference between that report, which continues to trend up higher, relative to the household survey, which is going the opposite direction. It's showing a loss in jobs. There's something very, very wrong with the jobs data that they're putting out here. And at some point in time, do you know what's going to hit the fan? Because that's going to have to get reconciled. And they're already beginning to admit that there's something wrong with the jobs data. And this is from the government. Yet he's not acknowledging it. It was a big negative outside week for the major indexes. Yes, we just went over that. Correct. Outside reversal week, we took out the prior week's highs, taking out the prior week's lows. Bearish. With the highs and lows surpassing the range over the 4 prior weeks. Agreed. Mega cap stocks remain clear laggards overall. Agreed. Tesla stock continues to plunge to fresh 2-year lows. Amazon stock is just above bear market lows, while Google is moving in that direction. Agreed. Apple stock tumbled to its lowest level in nearly 6 months with bear lows in sight. Agreed. Now, what I like about this is that this sector, there's a consensus out there, and this is the contrarian in me that says, okay, the consensus in the market is that these names are weak or going to get weaker. That's a good thing. We like that. We want to be on the opposite side of that trade. I just showed you that the NASDAQ and the S&P 500 intraday are showing that you have a bullish divergence on RSI. RSI is grinding higher despite the fact that on Friday prices were moving lower. So are we seeing a diminishment in the rate of change to the downside on the S&P 500 and the NASDAQ? I think we are, except the Russell 2000 is not yet. Perhaps this uptrend is a bear market rally that's run its course? Probably. With the indexes headed back toward their October lows? Probably. I don't think just yet. Perhaps the S&P 500 will quickly rebound or will be range bound for an extended period. I think range bound for an extended period is a high probability. The only thing that's clear is that the market is not acting well right now. Agreed. What to do? Investors should be reducing exposure due to the deteriorating overall market and performance of most individual stocks. Agreed. The however is this, is that you need to be able to, you got to get return on capital. So, I would, if you're not currently trading selling premium, learning the option selling business, learning that business and generating cash flow off of your capital, you should learn how to do it. That's what we do. We have a core portfolio of long-term positions. We add to it incrementally. Right now, it's a lot of gold stocks, silver stocks, emerging markets. right? We're not much in terms of U.S. equities because we're bearish on the U.S. economy. But if the dollar rolls over, as it has, the dollar has rolled over, the gold stocks and emerging markets will rally as they have. What else are we doing? We're swing trading long short. Doesn't matter. We don't care. But a big part of our business since April of 2021 has been option premium selling. That doesn't mean that we're not going to put on hedges to protect our position. We have one hedge on now, short of Hibbett Sports. That's on a Nike bet that they're going to have bad earnings on, I think it's the 20th, and that comes out next week. But we're also looking to put on shorts, which we had on. We booked profits on the S&P 500, consumer discretionaries, and on energy. So I think that they should be talking more about selling premium, generating cash flow with very small positions and keeping a large cash pile of capital to put to work. Because don't forget, you get these bear market sell-offs and then you get these massive counter trend rallies. You got to have cash available to you. While under pressure, it's still a market rally, yes. A few good days could shore up confidence in the uptrend and bring more stocks back to buy areas. I think that's a little bit of hopium. I don't like hopium. I don't like it. I think that we have a lot of problems going into 2023, and we're going to go to that in a minute because we're thinking macro here. We're not thinking micro. They're talking about this market on a day-to-day, week-to-week basis. They're talking about last week only, and they're looking for setups on a daily time frame. We're not doing that. We're looking at 2023 already, deep into it, and we're going to go to the yield curve in a couple of minutes. Of course, even in that scenario, investors should be wary of new buys given the rally's pattern of pulling back and erasing solid gains. True. Why? The market's in a downtrend. Stokes are rolling over. Momentum is going in the wrong direction. It's simple as that. And when you do get upward moves, what don't you have? You don't have institutional buyers. You got to have them. The retail investor and day traders are not going to keep a market rally alive. You need institutional investors. They're smart enough to know what's coming down the pike, most of them anyway. Now, as you take a look at the S&P 500, here's the weekly view. Not a pretty view. And each time that we've hit this upper band of resistance, we have been rejected. But that doesn't mean it's a foregone conclusion that it's going to be a straight shot down to this lower band of support in green or blue or down here in red. It's not a foregone conclusion. It's going to happen overnight or a straight line. This market it's cyclical. You're going to have a down week. Maybe you're going to get an up week. So that's great for us as premium writers because that provides us time decay. We like that. It provides us opportunities as swing traders long short. We like that. So yes, bearish chart. I'll give that to them. And the one bit of divergence. Now, I mentioned this earlier that you had the December contract on the VIX was positive on Friday. But did you know the VIX index was down last week? This is the fear index, was down last week. And when you take a look at the price action on a daily time frame, we were down on Friday as well. Think about that. That's a market where you had the S&P 500 closed down 2.75%, yet the VIX was down as well. What's that all about? Valuations. We're still expensive. I put out a charter. I'm going to go to it in a moment. Let me not get ahead of myself. We still got a very high PE. This is a trailing PE, not a forward-looking PE. The forward-looking PEs look really, really pretty. Don't get lured into that psycho game. Talk about hopium there. We're going to go to that chart in a moment. We have the shoulder PE ratio, very expensive. The mean is 16.99. We're still way above it. And normally, when we finally bottom out, we are below historical trend. This is the Buffett indicator. It's showing us fairly overvalued, but we are still 24% extended beyond the historical trend. When this market is finally done selling off, we will have pierced this lower band of support. That's what we want to see. Now, what the talking heads on CNBC are going to talk to you about are The forward PE projections. This is how they get you. Oh, on a forward-looking basis, here, this is what FactSet, and they're reporting earnings this week. What happened to that tweet? The forward 12-month PE ratio for the S&PX of 17.3. Remember, I just showed you a PE ratio trailing. This is known. That's in the books. I want what's in the books. That is numbers reported. Those are numbers reported. My English is horrible tonight. Those are the numbers that were reported by the companies, and that's what's important to me. These guys are going off of analyst surveys. So the analysts have still yet, and this is why I replied back, consumer discretionary names, they have still yet to really revise down that sector. So this is really pie in the sky numbers here. And this is what the talking heads will talk to you about on CNBC, getting you all excited. Stocks are cheap on a, what do they put here? On a SPX is 17.3 is below the 5-year average and above the 10-year average. So don't let them sell you on this. It's a bit of hopium. These analysts need to bring down their guidance. Economic reports coming out this week, not much. We do have consumer confidence coming out. Believe it or not, again, you want bad news. That'll, if anything, prod the market up higher because bad news is still net good news for the market, as sick and perverse as it is. GDP Q3, I think this is the final revision coming out. And then on Friday, we get the PCE index. This is the Federal Reserve's favored inflation index. If we get a miss on this read, you can see stocks rally on Friday. Very, very strong. We're going to get durable goods as well. Actually, this is a pretty big Friday. Durable goods coming out and disposable income coming out as well. So it is going to be a fairly busy week, especially on Friday, with numbers that could move the markets. Earnings coming out this week. Nike will probably be a part of this trade. FedEx will be a part of. Nothing much else going on here. Maybe CarMax. I doubt it, though. You know what? Definitely not CarMax, because the used car market is a disaster area right now. This time next year, you're going to be lucky to see Carvana. It's still in business. All right. I retweeted this for a reason. We're going to come back to it, because this is where we start beginning to think about forward looking. All right. So far, we've only talked about really the final 2 weeks of the year. Now we want to look forward looking. What's 2023 setting up to be? And this is very, very critical. People don't decide their future. They decide their habits that decide their future. The habits I have are, one, I look at the same charts over and over again because it allows me to do a pulse check. I'm very, very sensitive to changes in charts. It's not that I don't look at anything else and that may serve to influence me. I don't go through life like this with blinders on, but there are certain charts, and you can tell, my members will tell you, every night, same charts over and over again as a benchmark. We may introduce new charts, but by and large, same charts every night. That's the habit. That's the habit. And then for my macro indicators, I look at several charts that I discuss here every single week, usually twice a week live. And we're going to talk about them right now. So I've been talking for weeks and months now about the yield curve. And for those folks not familiar, the yield curve is predicted every single, I know people are out there right now that join in every single week, twice a week. They're going like this. Oh my God, he's going to repeat himself again. Yes, that's a habit, because I want people to learn and I want people to remember. It takes up to 30 days to develop a new habit. That's fact. So if you keep hearing things, hopefully it sinks in, okay? Please, because I want people that watch this live stream to make money, or at least to avoid losing money. So I've been coming on here talking about the yield curve for months. And this chart in particular, again, the yield curve has predicted every single recession since 1955. The only time there hasn't been a recession was 1965, when at the beginning of the year we were trading at a GDP of 10% and we dropped down to spot 0.01%, avoiding a recession. So technically still in a positive GDP. So this is a very reliable macro indicator. You're not going to hear your friends on Fox Business News talk about it. They're not going to tell you about this. They'll talk about the inversion of the yield curve because it sounds sexy. They don't ever talk about the correlation between the steepening of the yield curve and that of the S&P 500 and that of gold. That's what we're going to do here, because something very, very dramatic happened last week, and it happened on a single trading day. Let's talk about it. So for those folks not familiar with this chart, overlaid here against the yield curve is the S&P 500. Overlaid in gold is gold. So we've been talking about the inverted yield curve for months now. We are at lows on the yield curve. Not, I should say maybe we are still at lows not seen since 1981. Something happened last week that is kind of a game changer. Maybe. I'm going to put a maybe after that, because we don't want to be doom and gloom, and we don't want to be absolutists here. We want to be open-minded. We want to acknowledge the chart and a signal that what it might be sending us, because the markets do send you signals. You could choose to ignore them. That's a bad habit. Or you could choose to take note and then act accordingly once your stock charts start to confirm that things are not looking good, and you go to cash, you build shorts, etc. So on Thursday, this is a monthly chart. On Thursday, we were trading just off the lows of the month. By Friday, end of business, we closed positive on the month. And I've always said, don't worry about equities per se, because the charts will tell you that. You can have an inverted yield curve and stocks will still head up, or they'll still trade sideways. The problem for equities in earnest, in real earnest, is when you get the yield curve moving up higher. That means that the Federal Reserve is responding to something that has happened. And what the yield curve is telling you right now is that it has begun to steepen. Now, to be fair, we've had false positives before. We had it back in August of 2021, only to roll back over. But we didn't have an inversion then. Again, back here, April 2022, we rallied, but we didn't have an inversion then. Now we are fully inverted on the yield curve, and now we are beginning to press up higher. Is this the beginning of a steepening of the yield curve? We don't know. For all I know, by the end of business, the final trading day of this year, we could be back down at the bottom on the yield curve, fully inverted and at the lows of the year. All right, so the year is not over. This is just an observation on the 18th of December, 2022. Let's not ignore it, because we may be talking about it again a year from now and saying, thank God we've been watching this chart. Now, I've been saying for a while now, and I'm going to go to chart requests immediately after this. I've been saying for a while now that this market is not done going down. And the reason for that is that we have never had a blow off top on the VIX. Never. We haven't even gotten above 40 on the VIX. The high of the year was literally back in January. Almost a year ago now, the week of January the 3rd of last year was the high on the VIX. Excuse me, the high of this year. I'm already thinking 2023. Sorry about that. So for the most part, the VIX has been very, very mild this year. Very, very elevated relative to prior years or recent years, but still, it's fairly benign, tame. and we never saw a rally above 40. And prior to this recent sell-off on the yield curve, I mean, back in 2000, we've had steepening on the yield curve in the 2000 dot-com bubble, then here, the great financial crisis, then here on COVID. The lowest read on a blow-off top on the VIX was back in October of back here. Was back here in July of 2001, 43.74. That was the low of the blow-off tops. The highs, 89.53, great financial crisis, 85.47. That was COVID. What we're going into right now is going to be, I don't know. I mean, remember the great financial crisis? I mean, the COVID, the Federal Reserve did not have the equipment to solve the problem. It required fiscal spending, a lot of it. And that's why we're in the trouble we are right now. How are they going to resolve this one, especially with a split Congress? I don't know. It's scary. So what we're seeing here, and this is a very powerful chart. This is a cup with handle formation on VIX quarterly time frame. And while it is down on the quarter, the stochastics continue to put in higher lows. If this breaks out, that probably means that there's some sort of Armageddon out there in this market, and that you could bet your bottom dollar that this yield curve is steepening like a rocket ship to the moon because of all the accommodation that the Federal Reserve is going to have to put out there to salvage this economy. Leaving it off. Goldman slashes bonuses as much as 40%. Think about that. This is a business where your product goes home in the elevator every single night. Nowadays, they don't even go into the office. So they're slashing their bonuses. Goldman is worried. A lot of these investment banks are very, very worried. One bit of good news here is that the SPAC business is really coming apart. It has come apart at the seam. You're seeing a lot of bankruptcies here, and it may sound counterintuitive. This is a good thing. There's a lot of speculative mania out there, but a lot of these bankruptcies are leading companies to take up or buy these bargain assets at discount prices. Those assets are going to go onto the balance sheets of companies that are rock solid, and they'll be able to take these innovations and bring them to market, and that sets the stage for the next bull market. So this is all the speculation. Remember all the SPACs? I can't tell you how many times I did a chart request of a SPAC that was ripping through its third standard deviation Bollinger Band, and I kept saying this is not going to end well. And many of these companies are not even around anymore. One bit of good news here, and this is the second time Kissinger, he's the grandfather of globalism and the New World Order. This is the second time that Kissinger has come out and seeked a negotiated peace to the Ukrainian war. But under his terms, it's not going to happen. But they're probably going to attack him at 99 years old. These people are animals. They do not want peace over there. This is the biggest threat to the market, I believe, going into the new year. Ukraine and Russia, the biggest threat. It is escalating. And at some point in time, it's going to get out of control. And that's my biggest fear for the new year. Okay, let's do some chart requests. First off, I'm going to go back to comments in a second. I did a lot of chatter tonight, so I'm not going to have a ton of time to do chart requests. Members, the price targets, entry points, stop loss points, and price targets for the stocks I mentioned in yesterday's best stock charts for the new trading week, they are in the members area. So go check them out, please. Trader Isaac, Bob, have you tried chart pattern recognition in TrendSpider? Yes, I have. Yeah, I never realized cup with handle could also be double. Yeah, and you could yes, very, very true. That's called a negation of a head and shoulders pattern. It happened to me one time when I learned about that. This is off topic. It has nothing to do with TrendSpider per se, but I was looking to short the Russell 2000 many years ago, and it was a clear, beautiful head and shoulders setup weekly chart, and I shorted before the break of the neckline. Talk about a rip up higher, and I got killed on that trade. So yeah, I'm aware of it. Dan Ushman from TrendSpider, he tweeted out he was looking to add more pattern recognition tools, wedge formations. I could have sworn he said cup with handle, but I guess he already has it. But pattern recognition, yeah, that's up here. Chart patterns, double top, and you can click on these, and there you have it. There's a zigzag formation. Really good stuff, folks. If you're not currently using TrendSpider, use the link below to go over there, but don't use my discount code this week. They have 60% off expiring tomorrow. So again, use the link below. Don't use my discount code. You don't need it. I get 35% off. You can get 60% off ending tomorrow. Take advantage of it, please. Coin is the best pick. Yeah, I like a Coinbase for tomorrow. Let's bring that up here really quick. This is the weekly chart. We did make 52-week lows last week, so that is a problem. But when you take a look at the daily chart, and these are the power. This is the power of the automated trend lines, folks. Now you don't see them here. Click of a button. Now you do. Here's your wedge formation. And what you're seeing here is a bullish divergence on the stochastics. Despite the fact the price is putting in lower lows, you're seeing stochastics putting in higher highs. So Coinbase looks like a coiled spring, both on price and on stochastics. I hope they try to push it down tomorrow. Then we'll be looking to add to our position. We already have a long position in it. VIX heard Christmas rally coming, but smart one exit with SQQQ accumulate, then watch gold. Oh, if they do the gold, yeah, Putin does gold for that'll mean war. I'm telling you right now, if he demands gold for oil, you're going to see NATO. These psychos in the World Economic Forum, they don't care about nuclear war as long as it's limited. They're looking to reduce population count anyway. I mean, these people are psychos. Tim, Bob, will high dividend stocks, Annalie, AGNC, and utility stocks be better stocks during a sell-off? Everything goes down during a sell-off. Everything goes down during a sell-off. I'm fully anticipating that my gold stocks are initially going to go down with the overall market. Gold will go down with the overall market. However, is that they're going to be the first to come ripping up higher, assuming that the US dollar is going in the opposite direction. So it didn't happen in COVID because the dollar was so strong. That killed the gold stocks, but gold stayed relatively strong during that period, however, down. Any updates on EMXC on the dip? Not yet, Trader Isaac. I would wait for a weakening US dollar. The daily chart, EMX, or the weekly chart, I should say, on EMXC is not looking good. Let's convert this to Candlestick. We're holding the VWAP, but I'm nervous about the rising US dollar. If we continue to rise, that is not good for emerging markets. I would wait for the dollar to peak, then begin to roll over, then take that capital from the sidelines, start buying dollar cost averaging into emerging market names. All right, chart request 4. This is a weekly chart. Now a daily chart. It's only had the first leg up here of a rally off the lows. I think this is a long-term recovery play. For all I know, the bottom is in here. We don't know. We're not that smart, but I can tell you on a weekly time frame, you have an inverted head and shoulders setup. I think they're adding that cup with handle formation. But here's your left shoulder, head, right shoulder. And we are, I should say, we have broken out. I like the weekly chart here. Higher lows on Stokes. Nice breakout. But for a trade, it's already left the barn. The horse has left the barn. I think you need to retrace all the way back down here to do another retest. You can keep a bunch of sensitivity on here. But I would not buy this rally right now. We're rallying right up into resistance. And you can see that there are sellers above, as noted by the topping tail. Now we set it and forget it. TTCF. Tattooed chef. Weekly chart. We're at the lower band of the declining downtrend channel. I like this setup. We did not put in new weekly lower lows last week. The week prior to last, we broke down below that line in blue, which is an automated trend line. And take it off, put it back on, and we recaptured that support level. Double bottom setup on your stochastics. So the weekly chart here on Tattooed Chef looking really, really good. Daily chart. All right, so the problem with TTCF daily time frame is that you have resistance levels immediately above. Now, if the market turns friendly, the overall market, I'm not sure what the short interest is here. It's a stock that trades less than $5, so I don't know how much short interest is going to be in this anyway. But I don't think you're going to have much of a short squeeze. I wouldn't buy it here into resistance. I would wait for a breakout above, let's call it $1.52, and then enter on that breakout for a rally up to, let's call it $1, about $1.80. Putin said a gram of gold for 2 barrels of oil. I read that too. George Gammon's whiteboard talked about that about a week ago. Gold, yeah, no doubt about it. It'll be a repricing of gold. It'll kill fiat, and that's why I'm saying it's going to be war. If they're going to squeeze gold so hard, and it's really going to be a squeeze on the Western powers, the indebted Western powers. So sure, you're going to have a short squeeze on gold, but de facto, that means that by virtue of the fact that the Western powers don't have enough gold reserves to go pay for their oil, they're going to have to go and cover the lack of gold in their vaults and buy at those higher prices. You're going to see a short squeeze on gold, the likes of which the world has never seen. That's why I said, I'm telling you, if you're worried about a trigger for this market, the Russians are no joke. They haven't fully counterattacked yet. Not the fact that we have destroyed Nord Stream 1, Nord Stream 2. We're providing targeting assistance within Russia for their missile bases, part of their nuclear triad. 3 missile attacks happened on 3 separate bases, and they're strategic nuclear bomber bases. Think about that. If that happened to the United States, what would we do? And now we're talking about sending Patriot missile batteries into Ukraine. I mean, this is not going to end well. Okay. If you update your trend lines on 4, you should see a DTL on daily. DTL on daily on 4. We didn't do a daily review, right? All right, we'll go back to it. I don't think we looked at the daily chart on 4. Yeah, there's a lot of overhead supply up there. A lot of overhead supply. Be careful here. Okay. You were talking about physical gold. No, if so, the correlation between gold stocks and gold are very, very tight. So technically, the gold stocks tend to outperform gold during a major bull run. And usually, when the end of a bull market in gold is nearly over is when silver is vastly outperforming gold. So, uh, yeah, physical. I don't recommend buying the paper gold, because if you buy the GDX, there aren't a GLD. They don't have the gold. They don't have enough gold to cover it. Goldman Sachs said the break 1850 on GDXU over 2,000 all miners. Yeah, the miners are going to skyrocket. If gold breaks out, the miners are going along with it. That's why I'm even reluctant to sell calls on my positions. AQN, Algonquin Power Corp, utility. Wow, this is getting hammered, huh? A lot of the utilities are getting. Let's go. Let me take a look at the XLU. This is the second utility I've seen getting crushed. Utilities were just down last week. Not a horrible week. Let's go back to AQN. We broke weekly support last week. Not loving this one. It's in a clear and defined downtrend channel. I wouldn't short this, but I wouldn't buy it yet. I would avoid. I would really avoid this. This is just one to watch. Put it on your watch list. I don't know if it pays a dividend or not, but honestly, the dividend is not enough. I don't. AQN. Is there a dividend? Probably is. Oh wow, nice yield here. It may be okay to enter if you think I think you asked me this earlier. If the yield is safe, I don't know their business, so I don't know whether or not the yield is safe. So I don't want to pretend that I do. But if you believe that the yield is safe, and you believe that the shares are not going to go down another 10%, heck, they're already down nearly 37% on the quarter alone. Then it may be worth it, because if you're going to treat it a long-term trade, then you may want to dollar cost average into it now, but you got to make sure that that yield is safe. Wow. I'm way over, but Dane, I'll do it for you. AMD. AMD. All right, so the semis are not looking good here. Bearish reversal bar. I think that you could buy AMD down at, let's call it 63.50 per share. That's why I'm hoping for a washout on Monday, to be honest with you. On a daily time frame, you might have support. We bounced off of it on Friday, so there may be a trade to be had here. I would wait for Monday to nearly come to a close. Then that final hour, revisit this chart. Ask yourself the question: did we break daily support here? If so, wait for $63 a share. If we, what do we close on Friday? 65. Wait, if we break down below, wait for $63 a share. Let's overlay the weekly support levels. And there you have it. This is where you want to get involved if we break daily support right down here on AMD. Last one, shop. Very similar chart as with AMD. They tried to break it out. It was rejected. Bearish reversal bar last week. Bad week. Bad daily chart as well. We broke support. I do not like Shopify. I would avoid this one. If you see the share price hit 32.68, that would be your entry point. Folks, again, I want to close out by saying, thank you for being here. Like, subscribe, and don't forget about TrendSpider, 60% discount code. Use the link below to go there. Don't use my discount code. They will provide you 60% off on the website. Also, everybody have a awesome Hanukkah, a Merry Christmas, and if you're checking out for the remainder of the year, as many traders are, a Happy New Year. Thank you for being here. It's been an awesome year, and God bless you and your families. And it's my privilege to be here every Sunday and Thursday to spend time with you folks. It means a lot to me, and you provide me a lot more than what I could possibly give you. So thank you for my Christmas gift. It's greatly appreciated, and everybody have an awesome night. Trader Isaac, thank you. William, thank you. Thank you to everybody out there. Sean, thank you. Have a great night. Take care. Be well. God bless.